Yo, good day, good morning, good afternoon, good evening, whenever you may be watching this. This is July 17th trade of what you're looking at. And right now it is the 18th. I have been slacking. I did not make this post yet until this morning. Regardless, boys. So, July 17th was an absolutely astonishing day. We'll start over with NQ. So NQ on the 4 hour here has been doing a lot of chop work, and this is the last two to three couple days. And obviously that's accumulation. We have manipulation within here, and then distribution, which is this leg down. With that being said, coming into into Wednesday on the 17th, we had market open right around here. And whoa, the fuck? I meant to make that a vertical line. Yeah, okay, so we had market open right around here. And as you can see, there is this 1 hourly confluence, this imbalance here. And that's about it. We had nothing else get tapped into coming into later in the day on the lower time frames. We had no higher time frame confluences, which is why we did not trade this. But like we have an imbalance here, for example, that gets respected. We continue falling. But there's no real conviction to that type of trade. So we were not trading NQ. NQ did not get touched. But it was good to see the market actually waking up and moving. Sorry, boys, it's early in the morning. And then we have ES. So ES is what we did trade. Um, and with that being said, we have market open. You can also see the difference in the charts here on the 4 hour. Compared to NQ, you can see that we started this downtrend. ES on the day that we first fell, ES was trending up for whatever reason. And as you can see, we've got a lot of SMT divergence going on, making lows, making highs. So with that being said, we have market open. Let me grab that vertical line actually and just market open real quick. Actually, there's shit on the chart, so it won't even work. Regardless, we have market open on this candlestick here. And this candlestick initially is all that we needed to take a trade. We have 4 hour confluences, obviously this imbalance. We have a little imbalance here. But on the 1 hour is where we were mainly focused. We got the 4 hour bias, which is clearly bearish. And then we have market open, which is right here. So market opens 9 a.m. and gives us a bullish candlestick. We have London session highs right here within this area. And that was probably our main POI. We did not see that though. So it was like, all right, we're just not going to use it. If price doesn't want to track to it, yippee, yeah. Whatever. Don't care. So what we do get though is an imbalance right here coming into pre-market. This is an imbalance in pre-market. So on the 30-minute, we have 8 a.m. and then we have 9:30. So this is the market open candlestick. This right here is pre-market highs. We know that if we have pre-market highs get swept and come into a higher time frame confluence, which this 1 hour imbalance right here, that's good enough for us to scale down and start looking for an entry. So we have price push into this area and show a very good rejection. Obviously, we had to wait to see that rejection, but when we push into our higher time frame confluences, we're going to break down into the 5-minute time frame. So here we have these pre-market highs. We have market open, break structure to the upside, create an imbalance here, and continue to head for that 1 hour imbalance and to sweep pre-market highs. We ended up breaking structure above it, yes, but normally the 9:30 move is manipulation. And so what were we waiting for? We were on a bearish bias, so we were looking for a break of structure plus a third confluence. So boom, we have this low inputted right here into the market. And boom, we get a break of structure immediately after sweeping highs, tapping in and picking up orders from the imbalance. We move down and we create this imbalance right here, right? Perfect. That's our third confluence. So we as well within making this imbalance, we break structure again to the downside, more of a prominent low gets broken, and then we create this imbalance. So what does price do? We push back into this imbalance, and what do? We go ahead and smack down a short right here. Stops clearly above these highs, our break of structure, pre-market liquidity, 1 hour imbalance, all gets respected real well. We enter this position, and now we're looking to take profits on a higher time frame confluence or a higher time frame PD array. We have this 1 hour imbalance from a couple days ago, from last week, I'd say. Yeah, last week on Friday. And so this is our TP because NQ right here at this point in time has completely filled this and pushed way past these lows. So on ES, I'm like, all right, we should see the market do something ideal to this. We have full TP at the bottom of this imbalance. And as you can see, we get in the position, literally went like 4 ticks in drawdown, and then there was no more drawdown to that position. We continue to fall. Wick work, consolidation, wick work. And we slowly just made our way down until right here. And that was the trade. So it was about an hour and 15 minutes. And it was free cheese initially. We did have a second TP level though. And our second TP level, I got out because we were in that trade for an hour. And that's a little long for me. So I'd rather just get out when I can. We had a TP level set at 6:30. This would have been TP2. So let me find out why. Okay, so it was these equal lows, which yes. So we have this, which is a news candle, sweep these lows. So I was like, I don't really want to target these news lows. I'd rather just try to take my money. If I'm going to get the push down here, I'll take it from here, 6:30. And as you can see, the market came close, very, very close twice, which would have made this trade a much, much more profitable trade. But I'm going to take the piece of my pie that I know I'm going to get, which was this trade here. And our TPs were set down here as second TP, but you can see it never got tagged. So it was just whatever. We didn't really bother about it. We were out of this position here anyway on this wick down due to the fact that we were in the position for longer than I would have liked to be in your average position. And you can see here, this is exactly what happened today. And we just followed the rule set word for word, bar for bar. And yeah, so now we're going to go into tomorrow. And I might as well just give like a daily bias going into tomorrow. So anyone who watches this before market open, they'll have, I guess, my eyes into the market. We have liquidity. We have lows right here that we want to see probably snatched. I'm going to say that these are Asia session. Let me double check with my sweet little indicator. They are not. This is Asia session. Never mind. This is fucking yesterday still. We have Asia session lows, London session lows, sorry, right here. Well, they're slowly being formed. Asia session was already swept. So we have London, which is being formed here. Yeah, so this is 3 a.m. London session opens here. This is initially our drawn liquidity. So the 4 hour is what bias? We're on a downtrend. So this is a bearish bias. We have these imbalances here, which we would probably like to see filled. We had a push for this imbalance here, which never got contacted. So these are just areas to keep in mind initially, okay? So we'll scale down onto the 1 hour and we'll look for these same imbalances. We don't have many to work with unless we are looking to sweep out these highs, which is London highs. Yeah, it must be. Yeah, so we have London highs here that we're looking to sweep. We're on a bearish bias. This will be our target. We'll probably see it swept with unemployment claims or whatever news we have coming out today. But ideally, we would like to see a draw into this area of liquidity without breaking structure to the upside, which we'll see how that goes. And keep in mind, I'm not here to predict the market and be like, I want it to come here, and then I want it to do fuck this, and they go like this, and then this, and then this. Like, no. I'm going to wait to see what the market gives me. If the market continues to dump from here, then we're going to react and adjust our system to maybe take liquidity from here and look for shorts. As well, we have previous session market open right here, which is more of a valid area to use. And the other thing is too, if we aren't giving confluences, and there's just nothing else we can do. From my eyes right now, this is about the only confluence I see us having from this swing low to this swing high. We are respecting equilibrium rather well. We're just kind of chopping around it. So if we could see a short out of the discount, that would be pretty sweet, because we do know that if price wants to continue moving, we need to have some sort of drawback into this equilibrium, which we are getting if we wanted to continue this move, and vice versa for the other way around. So if we were to draw this 1 hour equilibrium from this swing low to this swing high, you can see that we're respecting equilibrium a little better. To continue this move up, we need to see a move down into equilibrium and then out. And that's what equilibrium is used for. It's used to let you know that you're getting a discounted entry. You enter within this area, this is a discount. You're getting a cheaper entry rather than if you were to take it out of here. And I'm speaking for buys, by the way. Now for shorts, it's the vice versa. If we are shorting, we are getting a cheaper entry and a discounted price in this area. And if we were to short from this area, it would be an expensive short. So just to keep that in mind, there's not really much else we could seek out of ES besides a draw on liquidity. Besides a draw on liquidity, and that's quite about it. Now we'll go over E or NQ real quick. I mean, I'm being honest, I could see us turning around here. We did respect this little imbalance here. We have this order block, 4-hour order block. This is a move down that sweeps liquidity. So we could potentially see a reversal from this area. I mean, the market is very, very overextended to the downside. We probably will need to see a push up before we see anything else. But with that being said, we have not broke structure on the 4-hour, and we have not broke structure on the 4-hour in ES, so we're going to continue with the bearish bias. We have this 4-hour PD array, which we are clearly respecting. We as well have this one, so just keep these in mind. On the 1-hour, we can redefine this to where the PD array really is, and it's right here. As you can see, a beautiful respect into it. We're looking for a shorting bias. So these Asia, yeah, this will be Asia highs are our drawn liquidity. We want to see London make a prominent low, sweep these highs, or sorry, make a prominent low, prominent high, and then see New York sweep these highs and fall down. With that being said, we as well have previous day liquidity sitting right here, and we have it sitting right here, which is honestly totally cool. Actually, I'm pretty sure this is Asia lows. This is previous day liquidity. So this would be our drawn liquidity, our first take profit right out the gates if we were to grab shorts out of this area. With that being said, we're on a 1-hour time frame. We only trade New York session, so we are waiting for the next 4 hours until we can jump into the market and actually trade. Until then, we're just looking for our draws to be contacted, which unfortunately they have already in London session. And London session is about to come to an end, if not, and I mean, it's not really coming to an end rather, but it's not as strong as it is when it opens. It's like PM session to New York session, you know what I mean? So with that being said, it's really just waiting for us to develop more confluences and wait for price to push into them. And as of right now on NQ, this is all that I'm looking for is a push into here. And we'll see, does price want to continue or does it want to respect this 50% mark or just respect this imbalance in general and continue moving down? And then obviously when we see the push into our higher time frame confluences, we're looking for a 5-minute break of structure such as right here, and then a push into a fair value gap, which we're going to pretend this is a fair value gap. Take your short entry, TP the lows, right? Yes, I'm playing hindsight. I don't even trade this session. This is a stupid thing to do. The setup's not actually there. This is not 100% my model, nor is this an A+ setup, what I just showed you, but I'm giving you an example of what to do when we do draw into our higher time frame confluences. And I'm going to just stop it there. So that's pretty much the outlook for today. We're bearish as of right now. We're going to wait closer. We still have a couple hours yet till market open for New York, and that's when we'll be able to read our actual bias and see where the market wants to go for the said day. But until then, I love y'all. Take care, and I'll catch you on the flip.